How did one almost unknown company manage to outpace Visa and Mastercard in money flow? It sounds like science fiction, but in today's financial world, there is a firm that moves more money every single day than those two giants combined, while employing fewer than 100 people. Even more striking, by market valuation, it already surpasses all of Brazil's banks put together. And the strangest part? You may have never even heard its name. We're talking about Tether, the company behind USDT, the digital dollar that has quietly become the backbone of the crypto market. More than 180 billion of these tokens are already in circulation, and the number of daily transactions runs into the tens of millions. No Latin American bank comes anywhere close to operating at that scale. So in this video, I'll break down why Tether grew so fast, how USDT actually works behind the scenes, why it's being massively adopted in Mexico and other countries, and how this technology is slowly reshaping the global balance of economic power. But first, an important warning. Don't trust comments from so-called crypto experts who promise quick profits and slide into your DMs. More often than not, they're scammers. Subscribe, learn how this space really works, and make your own decisions. Because in crypto, mistakes are usually irreversible. Why does Tether's model look like a financial money printing machine? To understand how this company reached such enormous scale, you first have to look at its business. And it's surprisingly simple. Not necessarily perfect from a moral standpoint, but close to flawless financially. The system works step by step. First, an individual or a company sends Tether regular US dollars. 100, 1,000, a million, it doesn't matter. In return, the firm issues the exact same amount of USDT. Essentially, it's a digital IOU, a token that says, there is a real dollar backing this. Then comes the interesting part. Those dollars don't just sit in a vault gathering dust. The company invests them in ultra-safe assets, primarily U.S. Treasury bonds. In other words, the same dollars, but now earning interest. While USDT circulates freely across blockchains and gets used by people all over the world, Tether keeps all the yield from those securities. Now add one more factor. The company doesn't run thousands of offices, employ armies of staff, or operate complex banking systems weighed down by massive bureaucracy. Its overhead is tiny, its margins enormous. In practice, this is a business that earns almost pure profit from interest alone. Its only serious obligation is to be ready, at any moment, to redeem every single USDT for real dollars if users demand it. No loans, no flashy retail products, no aggressive sales. The world uses this tool on its own, because it needs it. How did a tiny company turn itself into global financial infrastructure? Now that the basic profit mechanism is clear, an even more startling fact comes into focus. Tether isn't a banking conglomerate with tens of thousands of employees and skyscrapers scattered across the globe. It's an organization with fewer than 100 people on staff. For comparison, giants like BBVA, Santander, Itaú, or Banorte maintain vast workforces, sprawling office networks, regulatory departments, and complex internal systems. Here, by contrast, you have a compact team, and yet profit per employee that outstrips almost any financial institution on the planet. Even companies famous for extreme profitability, like adult content platforms or the world's largest chip makers, look modest when you compare revenue per head. Tether consistently comes out ahead. Why does this happen? Because its business isn't built around selling you something or fighting for your attention with advertising. It doesn't need to persuade customers, roll out loyalty programs, or burn billions on marketing. USDT has been adopted especially aggressively in emerging economies, Mexico, Brazil, Turkey, and several others. People didn't start using it because they saw commercials. They did so because it solved real problems. When a company this small becomes critical to millions of users. It's no longer a startup. It's world-class infrastructure. Tether didn't grow on hype. It grew because the market needed it. Why did millions of people start using USDT instead of banks? The secret behind USDT's mass adoption isn't hype or crypto fashion. In tech, there's a concept for the moment when a product fits market needs so perfectly that it no longer has to be pushed with advertising. People simply start demanding it. That's exactly what happened with Tether's digital dollar. While traditional banks remained stuck in slow processes, high fees, long lines, and endless compliance checks, users across Latin America, Africa, and Asia found a tool that simply worked. Transfers are fast, fees are low, there are no borders, no permissions required. Money can be held in a stable currency and instantly exchanged on global markets. For countries struggling with chronic inflation, this became a genuine lifeline. All you need is a phone and an internet connection, and suddenly you have access to the global financial system. That's why today USDT is no longer an experiment or a speculative toy, but an everyday financial instrument. To grasp the scale of its impact, you have to look at where it became indispensable. The first major use case is liquidity for the entire crypto market. If you've ever logged into exchanges like Binance, Bybit, or OKX, you've probably noticed that most trading pairs are denominated in USDT. It has effectively become the industry's base currency, the operational dollar through which nearly all Bitcoin and altcoin trades flow. For newcomers, this can seem strange. Why convert regular money into a token at all? But over time, the logic becomes clear. Without it, the market simply couldn't function at today's scale. Why does the entire crypto market depend on USDT for liquidity? For most traders, USDT has long become something like a digital checking account. The more of this stablecoin circulating in the system, the easier it is to buy and sell assets, the faster prices move, and the deeper the market becomes. Bitcoin trades through USDT, altcoins trade through USDT, derivatives, futures, and perpetual swaps, all of it rests on USDT as the base layer of liquidity. That's why professional market participants, especially in countries with weak local currencies, keep part of their capital in USDT. It's convenient, fast, and relatively stable. I still remember my first trade on a major exchange, when a strange ticker called USDT suddenly appeared in the interface, and I didn't fully understand why my money was being converted into that token at all. Only later did it click. It exists so the market can run smoothly, with minimal friction. That's exactly why I try to explain these things in plain language, so you don't waste time or fall into traps just because the mechanics weren't clear. Quick favor, subscribe to the channel if you haven't already. Most viewers watch the videos without subscribing, and that directly helps the project grow and lets me release more useful content. But for the global system, the significance goes even deeper. USDT is quite literally the fuel that powers crypto exchanges worldwide. The more liquid it is, the more stable the entire market tends to be. Without it, price swings would be far sharper and trading far less efficient. How did USDT turn into a financial lifeline for inflation-stricken countries? This is where the digital dollar moved beyond trading and became a survival tool for millions of ordinary people. Across Latin America, in Mexico, Argentina, Venezuela, Colombia, and Peru, many families have spent years living in economies where the national currency keeps losing purchasing power. Sometimes slowly, sometimes overnight. But the result is always the same. Savings evaporate. For a long time, households had few real alternatives. Opening a dollar account was difficult. Accessing foreign banks was nearly impossible. Protecting money from inflation was even harder. The arrival of USDT changed the rules. Suddenly, all you needed was a smartphone to store savings in a digital version of the dollar, without trips to a bank, without paperwork, and without the risk of sudden restrictions from local authorities. In Mexico, more merchants are starting to accept payments in stablecoins directly. In Argentina, families use USDT as a kind of savings account. In Venezuela, it has become a way to preserve wealth against devaluation. Even in rural areas with little banking infrastructure, the digital dollar offers a chance to escape currency collapse. Demand has also surged in war zones, where this format allows funds to be moved quickly when traditional systems break down. In effect, a parallel form of grassroots dollarization has emerged, driven not by governments, but by people themselves. Why could half of decentralized finance collapse without USDT? The third major use case isn't about remittances or inflation protection. It's tied to what many call the financial infrastructure of the future, DeFi. This is an ecosystem of services that operate without banks, without business hours, and without intermediaries, all governed by smart contracts. And it's precisely here that USDT has become one of the most widely used forms of collateral. When someone takes out a loan on a decentralized platform, they often post stablecoins as collateral. When users try to earn yield by providing liquidity or participating in yield farming, USDT is again one of the most common assets deposited. The reason is simple. Bitcoin and Ether are too volatile. In lending systems, sharp price swings create a massive risk of liquidations. A dollar-pegged stablecoin is far more practical for these mechanisms. It acts as a stabilizer for the entire structure. Without it, many protocols simply couldn't function in their current form. Today, tens of billions of dollars worth of USDT are locked inside smart contracts, making it a critical pillar of the DeFi world. But there's also an uncomfortable downside. If that asset were to suddenly disappear, a significant portion of the ecosystem could be thrown into chaos within hours. It's a stark reminder of how centralized today's decentralized financial reality still is. Why does Tether's story matter to you personally? Even if you've never bought crypto? By now, one thing is clear. USDT is no longer just a tool for traders or tech insiders. It has become part of the global financial infrastructure, slowly weaving itself into the daily lives of millions of people, especially if you live in Latin America, Central Asia, or any economy with an unstable currency. Banks move slowly, fees are high, bureaucracy is endless, national currencies weaken year after year. Against that backdrop, digital stablecoins are showing that you no longer need permission to store money, send it across borders, or protect your purchasing power. That doesn't mean you should rush to move all your savings into USDT, but understanding how this system works, why it emerged, and where it might be headed is becoming increasingly important. Technology has opened doors that were once closed to most people, and now individuals get to choose how they want to interact with money. If this video helped you see finance from a new angle, hit like and subscribe. Here we break down complex topics without noise, empty promises, or hype. Drop your questions in the comments. I read them and try to reply personally.